Hello, Melvin. Thank you so much for the Zoom earlier on. Me and Shirley, we actually did this deck for you lah to summarize all those stuff that we have covered today. I think we just do a summary for you. Okay, so based on what is our plan for the next 3 years, is definitely to make as much as possible. Yeah. Okay, so I did the whole of the entire investment roadmap for you. So right now we are looking for something between about maybe 2.6 or slightly higher. Our down payment is about 750 lah. So this is what we are going to put into this property. Okay, which is about 30%, 750. So what we are actually looking at, right, is that that's what I mentioned to you. New launch will grow approximately about 6% per year based on 2.6. So we are looking at this 468k growth in 3 years. Okay, in 3 years, which means that right after 3 years, your capital will grow from 750. This is what you put in, and this is what you grow. So ideally, you grow until about 1.21 and potentially after 3 years, you can look for something that is about 4 million already. Yeah. Okay, so this is what we are trying to do. We are trying to help you to build your asset. So I think I've covered it as well. What is the difference between resale versus a new launch? Yeah, so resale averagely grow by 2.8 to 3%. Alright, it's still growing. New launches will grow by about 7.3%. So this is what I've written for you. This is based on the analyzed return over here. This is for the resale, and this is for the new launch. Okay, yeah. So resale. Okay, likely if you enter the resale today, if you look at any other resale graph, right, you are probably entering at a peak, which means that if you were to sell in future, after factoring your interest and your renovation cost, your exit has to be higher than what the first owner pay for lah. Yeah. So for resale, people usually buy resale if they want to plan to keep the property for a longer period of time. Yeah. Okay, so I've also shown you like properties if you look at which are not near MRT, but because their entry price, right, is very near to the break even price. You can see they actually enter at a very low PSF that point of time, which is why today, right, you can see for those that actually bought 4 bedder, they perform very well in the resale market. Yeah. So I think the strategy moving forward is to buy something big and low PSF compared to the surrounding market pricing. Yeah, and this is actually where you find that, right, your profit will be the most exciting. Yeah. So in summary, go for something PSF low entry price. Okay, but yet something that can give you a high return, likely a 4 or 5 bedder lah into this market. Yeah. So I've done this for you as well. It's a summary of resale versus new launch. So if you go for resale, likely your risk is also 3 times higher because your interest is also 3 times higher than the new launch as well. Yeah. Okay. So if you were to do up your sum, which is I gone through with you, so it's about whether is it better to buy a resale, potentially can give you a rental of 5,000. Okay, versus buying a brand new launch with growth of 6%. For this, you will not be able to collect any rental. So which one is actually better for you? So if you were to look at for resale, okay, if the capital gain is about 2.6%, okay, you still make about 202 minus of your interest. Okay, but because you actually can rent out your property, so there's a rental income minus your rental. So if you were to do this, buying a property to rent out, collecting rental potentially is about 125. But if you were to go for a new launch 6%, okay, this is a plus, okay, minus your interest, minus renovation, your return is actually 3 times higher. So in terms of your return of equity, it's basically what you earn divided by what you put in, which is about 750. Let me just check. Yeah, 752,000. Okay. Yeah, if you multiply by 100%, it's literally about 50%. Not too bad. I think it's very good. Okay. Yeah, so I think we also spot this. Like I want to show you today which is better. Is it better to buy a 4 bedroom in the OCR, or is it better to buy a 3 bedroom in the RCR? So it seems that the return for a 4 bedroom, anyway, 4 bedroom in the OCR is pretty rare lah. So the annualized return is also higher. You can see that if you look at the entry price, it's also lower. Yeah. So what are the available options? Okay, I should say that you just focus on going for a low-lying fruit. Something if it's below the 2,000 per square feet, I feel that is something that you do not want to miss lah. Yeah, for Hilo it's about 2002. For me it's about 1008, 1009. And I purposely short these two for you because they actually meet some of the important criteria that I set for you. Number one, which is MRT. Number two, which is good school. Okay, and also a strong pool of HDB upgraders. Alright, and they have very low PSF. Very, very low PSF. Because today, if you look in the OCR market now, OCR prices, easily for the average OCR prices, is already hitting about 2002 per square feet already. For RCR, it's at least about 2006 per square feet. And for CCR, it's already about 3000 per square feet. So anything below 2002, you should seriously consider. Okay, why Hulock? Okay, I share with you about Hulock. Okay, this development is very near to the Lentor MRT station. It's also next beside the mall. So focus on all these. These are really the low-lying fruits in the market. Okay, low-lying fruits. Okay, 4 beders. Okay, safe buy or not? Okay, you take a look for yourself. OCR average prices is about 2002. Anything lower, please consider. Okay, even for you look at the current OCR prices, this is in Sora, no MRT, very near to JB. Okay, people are already transacting right about 2003 plus already. Okay, if you look at long-term model, which is just next to you, Lot, right? People already paid almost about 2004 to 2005, which is your potential exit price in the near future. Yeah. Okay, even if you look for resale like, yeah, well, these are all in the landlord enclave, but these are already like going to TOP or much older in age. Okay, see, people already pay 2.4 already. Yeah, if you look at Panorama, this one is almost about 8 years already. People already pay about 2001 already. Yeah, so today if you are entering at 2000, even the resale here in the area already about 2324, I feel that it's a safe buy lah. And Miss KTOP in 2027, wow, take a look at this. I think it's a pricing is really attractive. You can consider all this. Yeah, okay. So if you look at two MRT stops, the price is already at 2008 already. Okay, so I think Hulock and Miss two shortlisted project for you. So what is our strategy here? Today enter as low as you can. If you can enter it below 2000, is even better. 3 years, sell at 2004. Because I think today if you look at the OCR market, right? If you look at Clementi, they have this new launch right at Clementi Avenue 1. Which is called Alta. Alta is already right going to sell at about 2,600 per square feet. Okay, Chuan Park, I think all of us you know Chuan Park, right? Chuan Park is also about 2,006 plus per square feet. So these are all our so-called the future RCR prices. Okay, so I don't need you to exit at until 2.6 lah. If you exit at 2.4, right? 3 years, you make about 400 per square feet. Okay, multiply by your size. I think this is definitely achievable for you. Okay, so that's all, Melvin, for my sharing. I hope you like it, and I see you soon for the show flat viewing. Thank you so much, and you have a blessed day ahead. Thank you.